My student just made 7,000.
So it's actually 8,000 plus, but he kept withdrawing, and I made this video before he withdrew the last time. So it's 8,000. Sorry, not 7, 8. So even better, right? Let's keep watching.
Dollars in the market over the last month and a half. And here's the beautiful part. This isn't the first time. His name is the Fry Daddy. You've seen him in other testimonials. You've seen him through the years. I think we started talking about him in 2020. He's a retired military man. He's a family man. He currently works. So he has stuff going on in his life that provide him income already. And then he decided many years ago he wanted to get into trading as well. I think sometimes people think trading is only for people who sit at home in their underwear. I think sometimes people overcomplicate what this can do for you. They think way too big and they don't understand what consistency can do. I think people think they have to sit in front of the screens or have this many screens to make it happen. Last 11 years, I've been teaching traders. I've been teaching traders for a long time. Most of these people are adults, they're parents, they're leaders of the house, they're busy, they have all types of jobs, from lawyers to doctors. The people have come through these digital doors. We're gonna focus on some simple concepts to make you a better trader. Some of the stuff is gonna seem so simple, maybe even cliche, but here's the reality. Most of the things that you have to do in the trading space, you could find them everywhere you go. You don't need to pay someone. The problem is knowing and doing are two totally different things. So in order for us to be able to become better traders, kill our bad habits, stop over leveraging, stop doing the things that don't serve us, we need to understand why it doesn't serve you over time. Sometimes the data on that screen will definitely let you know, and other times your own history is screaming at you that this doesn't work this way, and you will continue to do it. So we're gonna focus on some very simple things that you can understand in order to take you one step closer to being a better trader. Shout out to the Fry Daddy for making $7,000 in the last month and a half in the trading space. Thank you for letting me tell your story. Let's get into the video, enjoy the content, and if you enjoy what we talk about on this video, if you feel like you found the person who could actually teach you something in this space, I invite you to DM me because I am looking for long-term students. Let's have a conversation because the next Fry Daddy might be you. As always, happy trading. Let's get into the video.
All right, before we fully begin, I just want to give you a little history on the Fry Daddy, show you what he's done, make you understand that this is not magic. He worked for this. I don't want you to think that what I'm about to teach you and show you is just some random free crap that I'm choosing in order for me to be able to entice you to join the community. This is stuff that we really talk about. And like I said earlier, there are many things that you can find about the trading space for free, for completely free, on YouTube, on Instagram, all over the internet, right? It's not something you have to pay for. The reason people pay me is because, one, they want to see how the thought process works, right? What is it that's important? Because there's so much data floating around everywhere. They want to know that the person that they're working with actually gives a crap. So we're going to start there. Now, something that you may not know about me is that I've been teaching people for 11 years. And the way that I've built this business, right, is basically through the results of the students. I speak about myself every now and then, but over the last couple of years, I've just stopped because that is the norm in the industry. And I just thought, you know what I'm going to do is I'm going to build this business based off of the student experience. Like most businesses are built. They're built by word of mouth. They're built by someone having a great experience and telling a friend. And in this world that we live in where everybody wants to be a trader, it's just easy. If you can produce the results, it's easier that way than to convince somebody that you're not some schemer, scammer. Yes, you may be rich and you may be successful and you may have all the things you want, but it's just not as meaningful in my mind as someone who didn't know anything like the Fry Daddy. So let's look at this conversation here from 2020. Hey bro, I wanted to share with you, this is my first standard in my live account that I have traded. It's 60% partial with an entry still running. I'm grateful for how your training has allowed me to successfully manage these types of trades while keeping my emotions in check. It's why we have rules and stick to them. I'm humble and grateful for your continued mentoring via your experience that you humbly share. I closed out my remaining positions for 12/21. So like I said, I've known him for about. So I've known him for a very long time. His profitability started somewhere along the lines. It's been years now, and you could find him. His name pops up once every couple of months, right? Because I'm not going to talk about him every single day. But if you go to on my IG, you'll see all these different names, all these different people who've done different things: 45,000, 18,000, 68,000, 166,000 made by a student, 43,000 made by a student. There he is. We're having a conversation about his profitability over the last couple of months, because it hasn't been easy for a lot of people. A lot of people out there in Instagram and social media world are complaining that the market is untradeable. It's not untradeable. You just can't shortcut your way, high risk your way, get lucky when the market is in this way. You must understand what's going on technically, fundamentally. You must understand your own system and way of doing things. You have to find something that works for you all the time. So the conversation begins very simply. And the first one's going to be the most cliche thing, but I need to say this to you. If you have high throttle risk, there is absolutely nothing anyone can do for you. Risk is the one thing that can kill any good strategy, good education, your own personal knowledge. You might know exactly what to do here, but your risk is too high. So there are ways of teaching people how to risk, but most people know the cliche, 1 to 3% of your account. So these days, you don't even have to go full throttle risk. Now, I have built bots that are full throttle, high, like just if it goes wrong, 1 or 2 trades, it's gonna blow. But my bots were working for a year and a half. Once funded companies decided to change rules and create obstacles, then they stopped working as well. And they haven't worked since that time. I never sold them. They were my own babies, my own projects. And they made me a lot of money. And they also lost a lot of money. But it just kind of cemented the same idea into my head that I already knew. If I'm going to do something full tilt, it's because it's automated. But what was working during that time? What was working is the things that we do in the community. Real risk, a well thought out approach, understanding your actual choices, understanding your market environment. And it kept working as it always has. Testimonials keep pouring out, no matter whether it's during the COVID series of markets, tariff wars, Ukraine wars, oil wars, all these different things that we deal with in the market. We are still doing well, okay? It can't be perfect because that'll never exist. But I'll tell you right now, the high risk approach that so many people take, where they're 2 or 3 trades away from blowing their account, where one stop loss that was 50 pips or 40 pips or whatever amount of points has to get moved because you're afraid of losing because it's too much of a loss, too high of a percentage loss. You can't thrive and you can't last. You won't survive that way. This is coming from someone who's been teaching for 11 years, and I've been in the market for longer than that. Okay? I'm trying to help you. This is completely free. I know you've heard this before, but my perspective is very different than a lot of people. I didn't start last week. I didn't start during COVID, right? I didn't start during when Bitcoin became popular. I've been around for a long time. I've seen it all when it comes to people's experiences in the market. High risk can never be defeated. It could happen short term, but are you trying to get a bag? Are you trying to get lucky in the market, or are you trying to build a career? You know what a career looks like? It looks like this. Now let me take this one step further so you get to know this man. Let me take it one step further. Let me show you what he said so you understand his lifestyle. I want you to understand that he's made $8,000 over the last month and a half, almost 2 months, by using low risk. He hasn't had to stress himself out. And here's the best part. Let me show you what his life is like. Okay, so before we read this, I want to remind you. Point number 1 is you can never get away with high risk. Like I said, I've built bots. I know what I'm doing. When we look inside of that community, you're going to see how much we do. You see on Instagram all those people with all those results. You see people like this that have known me since 2018. Why do you think they don't leave? Why do you think they don't go to some other person when there's a million gurus out there with all types of cars and mansions and success? Meanwhile, I'm just a guy with a hat on and a t-shirt and the same thing over and over. Why? Because what I'm giving them is valuable and it works. I'm not trying to make this about me. I'm trying to make this about trading. I'm trying to make this understandable and easy to palatable. So before we read this, I want you to understand that there's two things that can't happen. Number one, your risk can't be so high, so full throttle that you think that you're going to build a career this way. You can get away with anything, but getting away with something and building a career are two different things. Number two, you must understand your situation, right? What's working in your favor? And I'm not talking trading, I'm talking about life. What's working against you? What's working in your favor? We can't build a way of trading if you're really, really busy. You can't be on the screen. We can't have a strategy where you need, or management where you need to be on the screen all day in order to make this happen, right? So for some people, they need to be swing traders. For some people, they need to be more short term. They need to be more aggressive with the profit taking. They need to withdraw faster. Everyone's a bit different because everyone's living a different life. The Fry Daddy, he is someone who's a retired military man. He's also somebody who has a career, and sometimes he just can't be on the phone, right, to be able to manage out of these trades. How would they learn all this? Well, because what I give them is everything. I have certain experiences in my life that allow me to understand how people learn, okay? And when we look at this, we got a full course series of short form content, beginner courses, advanced courses, master classes, which are drill downs on very specific topics. And then we have Q&As and mindset. Mindset is a huge thing with me. Mindset, a way of thinking. And this mindset course is broken down into how to acquire goals and milestones, right? Understanding the expectations that you have in your mind versus the reality of what's going on. Breaking it down in the new trader mentality. What's working for the new trader? What works against the new trader? The lazy and procrastinator, which is very common in this world. And of course, the nomad, which is the most common thing in the trading world, which is a person who's jumped from course to course, strategy to strategy. They have all this knowledge, or so they think. They have all this knowledge in between. They know all these things, but they can't use it because they're all over the place. So I don't just focus on the things most people focus on, which is what is a trend line? What is a support and resistance? What is this? What is that? I focus on everything. Alongside the courses, we also focus on 3 strategizing webinars a month that are live, right? So you can ask questions if you got them. We prepare for the week. We prepare for the bigger moments. And then you have your daily updating. Every day, even if all I can do is say a little quick nothing, right? Just a quick recap, some key things you need to remember, hold people accountable, that is what I do, right? And also, of course, one-on-one coaching, which is a separate conversation. But my point is, I have to be able to get through to every single type of learning ability. Like, people learn at all different levels. Intelligence, that's a real thing. IQ, that's a real thing. Emotional intelligence is also a real thing. Everyone is, and we're all living different lives, different ages, different backgrounds, different households. We all have different stress levels, different thresholds for when we start to fall apart. So my goal when I started this was to teach everyone and try to reach them if I can. So how does that work? Well, one, we got to learn what it is necessary to understand in order to even decipher the information that's in front of you, fundamentally and technically. Number 2, they must understand that whatever ideas and goals and dreams and Lambos, Bugattis, and caviar that they have in their mind, throw it out the fucking window, because that doesn't matter right now. One step at a time, one trade at a time. That they must treat this professionally, even if they're part-time, like the Fry Daddy. He's a part-time trader. He's not sitting at home. So the $7,000, $8,000 that he made over the last month and a half, 2 months is more impressive because he's part-time. And he's already making income. I imagine from being retired military, he has something there. And from his career, he has something there. And my friends, that's how you build wealth. You want to make trading a lot easier? Take away the financial pressure. You want to make trading a lot easier? Stop trying to turn a $100 account into a $1,500 account in one day. You want to make trading a lot easier? When you pass that funded account, don't go full tilt. Stick to the 1 to 3% risk. Again, I know what it's like to go high risk. I built bots that made me a lot of money and landed me on the leaderboards for like 6 different or 7 different funded companies, and they were working for about a year and a half, and then they started to not work. So it proves a point that high risk can only work for so long. Even when it's working for a really long time, eventually the market shifts. And if you know anything over the last 6 years, that's all we get. Market shifting left and right because of fundamental cycles, the things that are going on in the world. My point is this: how do we stay consistent in the community? We worry about how we enter the market. We worry about the type of risk that we're approaching. If I can't have more than a 30 pip SL, because if it's a 50 pip SL, I'm going to get washed, then the only option here is to lower the risk because I need a 50 pip SL, and we're going to discuss that in a second. None of this will make any sense or work or provide you any kind of value if your risk remains high. The normal cliche is 1 to 3% of the account. That's the normal cliche. Do I believe in that? Not really, but it's too complicated of a conversation to have right now. You would have to be in the community and really understand our ways, okay? But that's it. Let's start with his journey. Additionally, you are a source of inspiration for me and have been for years. Not many, if any, selflessly give and pour into lives the way you do. You've shown and guided me into doing this around my schedule. I want to remind you, nobody gets paid for this. There's no affiliate fees. There's no bonuses. There's no under-the-table commissions for helping me sign people up. This is all very clean. They're here because they enjoy the content. The profitable people stay because finding someone like me, I imagine, is tough. I don't know what's out there. I'm not on the social media side of like popularity when it comes to trading. I don't care to be. I just imagine that it's tough when there are people out there who make everything about themselves for them to get the attention that they feel like they deserve. Kind of like a school format. You know, I like the community is basically like a school. It's an educational platform. So it's not about me. It's about the trading. For those that don't know, I work in an area where cell phones are not allowed. So here we go. Here are his obstacles. When I get off work, agent session is getting started, not ideal trading hours. London hours are usually when I should be sleeping before I am up at 4 o'clock to get ready for the day. I had to learn patience. I had to learn liquidity and sensitive price concepts. Those are masterclass concepts. I had to learn how to get over myself and lose gracefully when fouling up entries. I had to learn to stop doing the things that were fouling me up before the results came in. I started with Gustavo back in 2018, and he's been consistent in work ethic, consistent in truth telling, consistent in the investment of my career as a trader. I didn't even know anything about forex until I saw my wife doing it and became interested in it. I don't have to trade. I trade because I enjoy the challenge and use it as another stream of income. If you value focus, structure, and most importantly, accountability, then the Zaps way is the way to go. It's been a tremendous blessing in my life, and I will always do what I can to help further it along. In this world, most people won't help you in that way unless there's something in it for them. So I'm just grateful for people like the Fry Daddy, because you know, if everyone that made money in the market based off of what I taught them allowed me to talk about their stories, I would have triple the amount of testimonials. Is that because I know some magic? No, it's because I do what it is I do in this video. I'm doing in this video, which is tell you the reality. You're fucking dreaming if you think that your $100 account is going to turn into 10,000. It could happen, but you better take that money out, because if you continue to work the account in that way, only market volatility, aka market cooperation, or good old luck is going to keep this going for you. Eventually reality will hit and you will lose everything. If you go on my Instagram right here and you go to the podcast area, you're going to find different podcast episodes from different students. Okay? One of those episodes is a student that when he first started, you know, he made $43,000 testimonial was him. And he had other ones. He even got screwed over by a funded company. He had made almost $500,000 and they didn't want to pay him. So this is a real person, right? That you can verify and see, and you know, he's not my cousin or some AI bot like some of these guys do. This is a real human being. That podcast was done like 5 or 6 years ago. So before AI became a thing. Basically, he made like 25 grand and quit his job in the beginning of his career. That is a story that most people have. They made a certain amount of money, getting really lucky and being full throttle risk. They made a lot of money, and then they thought, I got this. I know what I'm doing. Maybe there was knowledge there, but the risk on its own is going to kill any possibility of this person learning. Because when you're high risk, you're too sweaty to understand what's going on. You're too nervous to really pick up on the nuances and details of what's happening here. So risk is going to kill you each and every single time. And not understanding your situation. Should you be quitting your job when you freaking need it? No, trading should be a supplemental thing until it can become something else. And what I've found through the years is the same thing that I feel. Trading alone is very, very boring. Yes, it makes you money. Money doesn't mean exciting. Money doesn't mean you love it. How many jobs have you quit even though they pay decently? Because you can't stand going there anymore. Trading is a freedom tool. It's freedom to do the other things you've always wanted to do. That's how I see it, and that's how I teach it. We teach something called match your check. The Fry Daddy likes to do micro withdrawals. So here's the interesting part about his. So this is the Fry Daddy. There you go. We're not making up some human being here. You got to be careful these days. There's a lot of people doing that. They build these profiles with fake people, turn them into trading testimonials, a couple of screenshots, and people eat it up. And then they say these fake numbers from these fake funded companies, and we don't play those games. These people are verifiable people with real lives and real results. It's just, what's the point of all the lying and, making it up when that person comes into your courses or buys your system or buys this or that, and they're like, no way this works, right? The scamming and the scheming is so short-sighted. As you can see, the relationships that I've built in this industry, they've been going around for a very long time. So let's look at the first one. The first one, this is not really the first one, but one of them is this quick $1,000 day, okay? Now notice his risk, $2 a pip, $2 a pip, stacking them up, right? I imagine and I know that he can risk way more, but he has a way of splitting up his account so that he can grow the account, withdraw it, grow the account, withdraw it, cut the entries quickly. He just said he doesn't really have access to his cell phone a lot, so we had to figure out a way to split the risk, make it easy to manage. He looks at his phone, he swipes out, it's done. A number that he's always aiming for, a percentage gain that he's always aiming for, because he knows that past that point, we're gonna have a difficult time. There's no one way to do this. You have to understand yourself. You have to look at that mindset course or any mindset course if they're out there on YouTube land, and you have to find things that make sense to you and then stick to them for a long time so that you can build data. This is point one and 1A. 1, risk will kill you if you don't know how to put it at a palatable position where that risk is not so high that you can't withstand these trades. And 2, that you understand the obstacles and the strengths that you have going forward in your career. You can't trade like Gustavo. You can't trade like me. I'm home all the time if I want to be. You can't trade like the person who works in a retail store and they can look at their phone anytime they want. You also might not be able to trade like the person who could put in a $500 account, and if it blows, they'll just do it again because they have that type of monetary flexibility. Or they can buy themselves a $400,000 funded account and not think twice. But for you, it's the end of the world if you lose this thing. You have to understand yourself, which is why I think mentoring does work. Education works because it makes you learn about yourself. It makes you make better choices. Now, if you want to fight that and then you want to do whatever it is you want to do, then we're having a different conversation. So let's look at some of the screenshots. This is the first large withdrawal. It was a $2,272 withdrawal back in March 11th. Now I lost track of how many withdrawals he had done. I'm trying to bring up all this stuff on screen. I lost track of most of this. And at some point I'm like, hey man, can you just tell me what it is going on here? This is a screenshot from back in 2024, a withdrawal. You're going to notice 1,800 for the week. He's never really, this year was the first year where he's like, you know what? It's time for me to bring up the risk. Think about that. He was happy with just making his $1,000 withdrawals bonuses. We call them like life bonuses, like match your check. They're just there growing and growing. And maybe you invest them into something else that grows even more. Maybe it gets you that dream home. Maybe it gets you that dream car. Quality of life is its own prize. People think of the market as like this thing that's going to give me 100K one shot. But there are people out there that maybe they're not making 100K, but they're making 40, 50K a year, 30K a year? What if it's just 20K a year? Are you going to say no to something that you just swipe a button on? Are you going to say no to something that you give 15 to 30 minutes a day, providing you $2,000, $3,000 extra a month? Or even if it's just $1,000 extra a month for 15 minutes a day of activity, you're going to say no? You watch TV for free. You watch all types of things for free for some of you out there. Some of you actually go ahead and pay for those all types of things. You got to start shifting the way, thinking about how you think about things, because within your thought process is a whole lot of sabotage, which is why when you look at those courses, yeah, we're going to cover the fundamental things. We're going to cover the technical things, but we're definitely going to cover the way you think about things, because if you get in your own way, nothing is going to be able to fix that for you. So he made that $2,000 day. Eventually I was like, hey man, I don't really understand what's going on. There's so many withdrawals. So he gave me a bit of a breakdown. $2,272 on the 12th. That's the screenshot you saw. $806 on the 18th. $223 on the 27th. $954 on the 2nd. $742 on the 6th. $1,400 on the 8th. I haven't made this testimonial because he keeps withdrawing, which is a good problem to have. This is the $841 one. This is on the 15th. And then this is the one on the 21st, which is $872. So if you are doing the math, so yesterday I'm speaking to the Fry Daddy, and as you can see, I'm like, hey, April 15th, this, April 21st, this. So it's about 8,000 plus, right? And then he said, scrolling. Yes, sir, that's correct. So he's made $8,000 in the market, in a chaos-filled, war-filled, everyone knows, the president is manipulating the market, or the way I like to see it, he's protecting the market from tanking to hell. And we know this exists, and we know this is going on, and still he thrives. That is insanely impressive. So for the first portion of this video, what is my goal? My goal is to stop you from over-leveraging, thinking that you can't make money in this market with some sort of more calm, palatable, repeatable risk. You have to be able, remember, are you building a career, or are you building just a moment in time? If you want to get lucky, go on rain bet, go play poker, go do a parlay in sports. But if you want to build some sort of consistent income stream, if you want to be in the market and see those trades develop into something more than you could ever even imagine, then you need to lower your risk. At the beginning of your career, you're acquiring data, you're acquiring style, you're acquiring an understanding of what works and what doesn't. You can't do that if you're just getting bombarded by losses left and right and just blowing accounts, because all you're worried about there is the frustration of blowing accounts. You need to take some time to build the skill. This is a real thing. The second thing is, you're never going to be able to actually do this if in your mind the only thing that makes sense is, I'm going to take out 5,000 because that's what I want. That's not how this works. You got to think of the market in percentage gains. If I gave you $100 and I told you, hey, I'm going to turn this into 1,000 for you, but it's going to take about a month, would you go no? No, you would say, okay, cool, that makes sense to me. But why can't you do that? Why is it that, remember, 11 years teaching traders, you know how many pieces of history I've seen as far as P&Ls and people's trades? I do one-on-one coaching. I've been doing that for 11 years. That's where I really started. The community came in about 7 years, 8 years now. Okay? So I've seen it all. I've heard it all. I speak to these people. I hear how they think. So I'm trying to stop you from going through what they go through. Or maybe change your mind, because what you're doing doesn't end well. It can't end well. So a lot of people, the way they think makes no sense. They've had the 100% gain. They've had the 150% gain. The problem is they don't believe that they're going to be able to do it again. So they try to push and take advantage of any situation that they feel opportunistic in. And that's not going to work, because when we do the second half of this video, we're going to look at some technical things. You have to understand that what you're doing doesn't make sense on a career level, on a this is how this works level, and it definitely doesn't make sense on a technical level. Your risk must be appropriate. If you can't manage a lot, you shouldn't be trading a lot. Every trade you take should be journaled, documented, understood before the trade starts. What were you looking for? And then as the trade is going, what do you see? If you change your mind, why? And be clear about this. And when the trade ends, a recap of the way it went. That way you're living these moments more than once, so you have a better chance of learning from them. If you can't do that because it's too many trades, then lower the amount of trades. I know, insane. A lot of people work against themselves with these things because they've never gotten better advice, because their guidance is what they see on social media. Some guy with a 50 lot trade and gets 6 pips. The numbers look sexy, but these people are never going to get anywhere near those numbers. You don't even know if that's real. So the way that I teach people is like this. We begin where we begin. First, we must build confidence in what we know, because once you build confidence in what you know, whether it's through somebody teaching you or data or time or experience, then you're more likely to do the right things and behave and take out those percentages. People will grow an account from 500 to 3,500. It's just a number in my head right now. And then they'll go, no, I got to get it to 5. Right? They start to make up these different situations. No, you should have already known what you were going to do before you even got there. I've over-leveraged. Everyone over-leverages at some point. Sometimes we have a way of doing things where we know there's going to be a lot of news, where I'll tell them, hey, I'm going to go on a side account. And what that means is I know that I might lose this money, but I also know that this might turn into a insane percentage gain. I'm not willing to risk my real accounts, but I'm willing to send it with an account that I don't care if I lose this. Now, I'm in a different situation than a lot of people. But for some people, they'll do a $50 one, they'll do a $100 one, and they don't have to do it at all. But I like to share what it is I think makes sense, because some people's personalities are aggressive by nature. Some people are passive by nature. Some people are stoic. Other people are the opposite of that. So we can't just do things one way. We can't just find a singular model. I don't believe in that. I think that's why people struggle so much, because one moment things are working with this one singular model or an indicator or something, and then the market shifts in its personality, right? Right now is a great example of that. And they don't know how to handle that. So then they just keep pushing with the same thing, and they're just getting slowly destroyed. Kind of like the bots that I told you about earlier. That's very normal. Humans can pivot. Humans have the ability to decipher and have intuition and things like that. So when you are trading, understand what makes sense for you. Kind of like the Fry Daddy just explained in that screenshot. He has to withdraw in that way. He has to manage in that way. It works for him. And it works for a lot of people, because most people, his life is exactly what they're going through. They have jobs. They have responsibilities. They can't reach their phone every day. They can't sit in front of the screen. So we teach them to pyramid in. We teach them to manage in this way. All right. So that's it for the mental side of it. If you want more of this, you know what to do. You can contact me on Instagram, contact me on YouTube. Let me know you want to join the community. I've had the community doors not closed, but I haven't been aggressively signing people up for about 2-3 years now, because we hit the number that I really wanted to have in there, and I've been okay with what I got. I'm not really looking to be super viral, if you haven't noticed. What I want is a little more growth, right? It's time to add some new faces in there. If you've been in the community before and maybe you left for whatever reason, usually it's like a monetary reason, let's have a conversation. Let's discuss. And I am looking to kind of get some new blood in there and some new faces and some new puzzles to figure out. It's what I like to do, if you haven't noticed. You don't survive in this industry as an educator as long as I have, the way that I have. If you haven't noticed, rough around the edges, I curse, I speak my mind. Go look at my Instagram. You'll see things that you're like, what the hell is he talking about there? Because that's who I am as a person. It's exhausting to be something you're not. So I just decided I'm going to do it my way. And so far, so good, 11 years later, going on 12 by the end of the year. So now let's get into the stuff that you probably actually give a crap about, but hopefully you really heard me on the first part. We're going to talk technically why certain things that people do work against themselves. Now that we know that risk can kill the future of your trades, kill the quality of your trades, kill your ability to learn, because you can't learn while you're sweating bullets over every single trade you take. We know that we must lower the risk and become more patient about the growth in this industry. The second thing, that your life must match your style must match the reality of your life. You can't have a 10 lot trade and then you can't even lose this, not even by 10 pips, and which you shouldn't be doing in the first place. And you can't look at this for the next 6-7 hours because you're at work. You can't think that you're going to give this 5 hours a day every single day and set yourself up for failure because you know that eventually your spouse, your family, and yourself are going to need time. You can't make this your whole life. That's something that I definitely teach in those mindset courses. Adjust your goals to your reality. Adjust the management of your goals to your reality. Do not try to do what somebody else is doing. You could take some of the finer points, but there are things that are very different life to life when you compare two people. Okay? Now we're going to get into the technical side of things. The technical side. We just discussed some of the more mental adjustments because the technicals mean absolutely nothing if you can't understand, if you can't make them work for you, all right? If every day is an uphill battle, you got a big problem. So we're going to focus on some very simple things that you can do so that you can stop placing yourself in very crap situations. So here's what we have. GBP JPY, we're on an hourly chart. Now, there are conversations about if you're an intraday trader, you should really understand the higher frame. If you are someone who's looking to take about 3 trades a day, something like that, you should understand the lower frame. There is a lot to this more than just one way to do it. Your time frames matter according to what you expect out of them. All of this matters according to what you expect out of it. So let's talk about the person who's just a lot on a lower frame, like an hourly or an M15. So let's go lower. People who are on a lower frame, the biggest obstacles that they have is that there's a lot of data showing up on the screen. Every 15 minutes, they get a new candle. So you're more susceptible to changing your mind, feeling impatient, impulsively getting into the market, impulsively managing out of a trade, doing things that are just emotionally based. So the number one thing that you need to focus on if you're struggling is, am I trying to do the same things over and over, or am I just feeling my way, vibing my way through the chart? You can't vibe your way or feel your way through this. Everything must be accounted for. We call it a rinse and repeat methodology, where you basically do very similar actions all the time. Is it 1A, 1B, 1C? No. I'm going to say it's like a tool belt of responses to certain market criteria. So if you see the market a certain way, you always do this. If you see the market that way, you always do that. Like what you saw with the Fridaddy's numbers is that they're very similar over and over. Some of them are a little larger than the others, but when you look at them as a whole, I think it was 8 different withdrawals or something like that, or 6, whatever it was. Maybe 3 of them stuck out as larger numbers, but the rest of them are around the same percentage size. So that's something that's important. The more vibe and feel that you put into this, the more stressed out and eventually unraveled that you're going to become. People lose their minds on this, right? Where they have let's say they grew from 1,000 to 5,000 and they'll blow the account and then deposit 500 when at any point they could have cut this down at 2,500, at 3,500, at 1,500, but they would rather lose the 5,000 and start again than accept defeat and close the trade. Okay? So the first thing that you must learn is that every decision must be accounted for before you get it. So let's make some simple processes to be able to define my entry and my exit. Now remember, I'm just trying to teach you some basic things on a YouTube video that you stumbled on so that you can become a better trader. There is so much to this that we cannot cover here. And you know what I'm going to say. You want more? You like what you're hearing? You like the tonality? I'm getting through to you? You're going, yeah, he's talking about me. Then you know what you got to do. We got to have a conversation about you joining the community. But for now, I'm going to give you some very simple things that can help you here. So let's say I am a GJ trader. And let's say I am not looking at any of these other frames because I am dumb. And I don't want more data and more details. I just want to look at a M15 and figure out how I'm going to get this done. So here are some very basic things that you must do if you're on a singular frame. And if you don't do this, you're already at a monstrous disadvantage. But you basically put yourself 1 foot in the grave when you don't do these things. Thing number 1, you're already 1 strike because you did not look at the higher frame and you don't understand what's going on the higher frame. You may think this is bearish right now. You may think this is bullish right now. You may see this low and go, oh, obviously it's bullish, right? You're missing information. There's a lot of you're missing fundamental information, news information. You don't understand that next week is rate cuts. We might not even get movement today. You don't understand that this weekend there might be ceasefires or more negotiations or military escalation in the Iran war. You may not even get movement today. So you're over here trading with such vigor on an M15 thinking this is really going to work for me, brother. But it's not. It maybe will. Maybe it won't. You have no idea. Ultimately, it won't work for you long term because you're not in control here whatsoever. You have no edges. So let's bring some edges into this chart for ourselves. Edge number one, I'm on an M15. If I am going to trade this, no matter how stupid the price, it should be somewhere in this ballpark. If I'm on an M15 chart, I am susceptible to an overwhelming amount of data that'll make me do things I didn't mean to do, right? And I'll regret later. So the way that I look at it is this. Whether you use a Fibonacci for a retracement line, or you use some sort of breaker method, order block method, liquidity concepts, doesn't matter. Sensitive price methods, I don't care. Bank method, I don't care what you're using for a technical reason. Stick to that for the next 60 trades, 90 trades, 180 trades. If that number is too overwhelming for you, so then think of it like time. For the next 2 months, this is the way I'm going to do it, win, lose, or draw. Now, if money is the first thing that you start thinking about, we got a problem. The problem is, again, the money's in the way of the learning. You got to go through a phase of doing this on the cheap, basically for free, because it's like a business. It's a business. In business, do you deposit, let's say you got $100,000 for this business. You're opening up a bakery. I always like saying bakery. You're opening up a bakery, a barbershop, a combat sports gym, a gym, a salon where they wax people's nipples. I don't know. If you have $100K for this business, but it takes $50K to open it, you're going to put the whole $100K in it in the first month? No. You're going to wait to see what your clientele looks like, what your traffic looks like, what your utility costs look like, what kind of employees you're going to get, how wasteful they are with their materials, everything that comes with having a business. So for you to go, oh, I got $1,000, I'm going to put it in the market, see what I could do. That's not going to work. You're going to put in $100 and trade it at 30 cents a pip, or $500 and trade it at 30 cents a pip, where it's basically impossible for you to blow this. And you're going to slow roll your way through this. 10 cents a pip, 10 cents a pip, 10 cents a pip, until you can finally understand that when the market is like this in the middle of nowhere, it is not your job to decipher whether or not it drops from here, goes up from here. You need to learn that there needs to be prices of interest that you target, and you define these prices in the same way each and every single time. So like I said, it doesn't matter the way you do it. There's no holy grail, this is the only way to get things done type of way to do it. People right now are selling book maps and volume indicators and footprints. Ultimately, they're just trying to tell you that this price is important, right? And maybe those indicators might help you. Maybe they won't. Maybe they'll add more confusion. Personally, I'm not an indicator person. Of course, I've built systems and things like that. But I like to teach a naked chart because you don't have to be home for this. You could be on an iPad for this. You can be on a cell phone for this, right? You could do most of the work on your screens and then just manage through your phone. It works. It works. Again, there is no right or wrong way. So you got to find what works for you. For most people, the more that's going on the screen, the more confused they are, the more stressed out they are, and the less likely they are to be able to survive these trades. Okay? So that's technical point number one. You have to be able to come up with a real way of putting down those technicals, and this is the way that you do it going forward. You do not allow slowdowns to entice you to get in. You going, I need a trade, is not confirmation, is not an edge. It's just an impulsive emotional reaction because you need a trade, aka you need dopamine, you need a fix. For a lot of traders, they just want to be in the market. That's a huge problem. We can't have that. So however you define your technicals, you must continue to do it that way. And I think that the next piece of conversation is 3 different ways that you come up with your trade. Every single trade you take should have very similar confluences over time. So yes, every now and then you might get more confluences, a little less confluences. Maybe you flex a little bit because you think the market's not gonna happen on a higher frame. Again, this is a very complicated conversation, but I want you to, one, always look for your technicals in the same way. 2, 3 confluences every single trade you take. So that means if you wake up in the morning and you go to take your morning pee, you wipe the crust out of your eyes. Oh, I feel like crap. I woke up this morning like I got ran over by a truck. Oh my God. You waddle over to your bathroom. You know, you get there, you put up the toilet seat, and then you start peeing, right? And you're peeing. Some people might take out their phone and look at GJ and go, well, it hasn't moved. The pee's still going on in the background. It's still, the pee's still hitting the toilet. For some of you gentlemen, maybe you sat down so you don't hear it as much, but you're still peeing. And you take out your phone and you look at your phone and you see this consolidation on the screen and you go, well, I know it didn't reach my price, but it slowed down. That's enough for me. Already wrong. 3 confluences. So what are your confluences? It could be simple, especially beginners. Stop overthinking it. You don't know what you're really talking about just yet, so keep it visual. I like to do that with beginners. Visual. So where is the market gravitating towards? Here. That's confluence number 1. What is the last thing that happened here that is of significance to you? A strong bearish drop? What is this? One of the strongest continuation positions of that strong bearish drop. So now I got 2. And when the market gets there, what kind of closure do I need? Well, I like this 45-minute close if it matches the high. Boom, 3, you're in. The next step is this, the risk. How much risk does this trade deserve? If you really wanted this price, instead of you thinking, let me put in this whole $1 a pip, and if it loses 40 pips, I lose 40% of my account. Why don't we try 20 cents a pip as a first entry? 20 cents a pip. That's it. And then give a justification for another 20 cents. And you can build your way, like the Fry Daddy in those screenshots, towards the real risk that you wanted to build towards. So for in this example, $1 a pip. You can do that. So instead of you thinking, oh man, should I put in the whole $1 a pip? Train yourself to always participate in the trade that you wanted in the first place and average your way into the real risk as time goes on by a predefined confluence that triggers you to add more risk. Why? Why do we do it that way? We do it that way because this allows the person to be able to know whether or not they're even accurate. Let's say that first 20 cents a pip goes all the way back up. They're now 20 cents a pip negative, 24 pips negative on a 20 cents a pip trade. That sounds much better than a 24 pip negative on a $1 a pip trade on a $100 account, does it not? So it allows you to see, wow, that trade sucked. And then you go into your journal and you find out why that trade sucked. You follow up on this chart, not with the intent to enter again, but to see how it played out. Maybe the market hit the high and then works its way back and 3 days later closes exactly how you wanted and then drops. And then you can start to understand what is necessary for the trade that you have in your mind to play out. What happens the most in order for the trades that you wish to have to actually play out? Once you see it enough, you start to lean into that instead of leaning into whatever feelings and vibes that you had in the trade when you first started it. That is how you learn in this space. There must be intent and control and recapping like a business. Every business you've ever been a part of, whether you work for them or own them, what do you know about them? They have policies, procedures, and documentation procedures for everything. Everything. You work in Subways, every fucking tomato we cut in here is accounted for. Every squirt of light mayonnaise and sweet onion chipotle sauce and ranch is accounted for. You steal a cookie in there and someone's going to know there's a cookie missing. Why do people do that? Got to know how the money comes in and you got to know how the money goes out. You got to know what's working and you got to know what's not working. So this is a simple way to do it. Again, step 1, define a price. If you already have a way you do that, perfect. If you want to learn how to do that, join the community. Step 2, when the market gets there, if you have your 3 confluence, enter. Step 3, how much risk you enter. That's what's going to matter there. You turn this into a possible disaster by the amount of risk that you put in. So you should learn that if I'm going to work my way to my desired full risk, there should be even more confluences inside of the price that made me trigger the entry in the first place. That is how you learn. One trade at a time. Let's look at a gold. Actually, let's go to the community first. Let's look at some of these entries here. That's pretty damn good. US 30, nice strong drop, good amount of pointage. GBP JPY, strong sell. You see how it's very close to where he was. Now there's something else going on here. We call that sensitive price. But my point is, you see how he's pyramided in a zone? He learns from me, obviously. Let's look at something else. Scroll a little bit. GJ. You see that sensitive price right there? That's a concept that we have in the community. I'm sorry, GU. And you could tell that the market's is magnetized towards that point. This person, GBP USD, look at where he's at, right? Let's look at another one. This is another student, 500. Again, AUD JPY. You see how they split their risk? Why do they do that? One, because they're pretty new. Yes, they're like that guy that you just saw on that screenshot. He's been in another testimonial with 7 withdrawals over the last like 5 months or something like that, and he just got another one for 4 figures. So I think he's now at 8 or 9 or I don't know, one of those numbers. My point is, you'll notice that they're pyramiding in. We call it pyramiding in or averaging in. They're splitting their risk, however you want to discuss it. The way they justify splitting their risk is different for each and every single one of them until eventually they hit what we call their max allotted risk for the chart. And every single trade that they take is very similar. This isn't a signal group. We don't do signals. We do something that they call non-signals. They consider it better than a signal because ultimately you still have to make the choice to get in. You still have to make the choice to manage in your way. I'm telling you what the choices are, but you still have to choose them. So step 1, what is it? Correct. Step 1 is get to the price that you've justified, no matter what. Do not change your mind. When you get there, enter the lowest amount of risk that you're willing to enter. And to build up the risk, you must have criteria. Criteria to actually build this risk up. And have a max that you will not break whatsoever. Now, this has more nuance to it, but it's a YouTube video, and I'm just trying to get you some information. Let's do one more thing, and let's talk about accuracy. As a person who's seen so many trades through the years, the number one thing that's frustrating is when people give away the little bit of control that they have. If I am inside of a consolidation, this, notice I'm on an M15, that. Where the market's not really breaking away. There are these moments where the market is just kind of still, mitigating, absorbing, however you want to discuss it. I don't give a crap what your terminology is. It's all BS when people are like, no, this is the only way. Bullshit. It's the way that works for you. There's profitable traders that use indicators. There's profitable traders that are naked traders. There's profitable traders that use only fundamentals, right? But they adjust the risk management. There are profitable traders who will be negative 500 pips to catch 5,000 pips. Stop thinking that there's a holy grail. You're gonna one day, you will. We just did a masterclass. Where I broke down the 14 realizations. There's more, but the 14 realizations. Where is it? Right here. 14 realizations for traders that it takes them way too long to come to these conclusions, and they do a whole lot of losing to eventually understand that it can't be done the other way. It has to be done this way. It has to be done with control and professionalism. That's what we're discussing right now. So instead of you taking years to learn this or losing a lot of money to learn this, let's learn it right now. These are very simple things. But in the trading space and most things are easy. Oh, you want to learn how to be a runner? Just run. It looks easy, but do it. You want to learn how to box? Go to a gym and hit a bag. Go ahead. Go to the gym and hit the bag and then jump in the ring with somebody. See what happens to you. Oh, jiu-jitsu? Just get up. Go ahead, get up. If you've never done jiu-jitsu or wrestling and you think you just get up, I invite you to come to my gym and get up and see what happens. We'll do a bet. If you can get up and you have no experience and you can get up with me stopping you from doing that, I'll give you $100. And if you can't, you give me $100. How about that one? Things look easy from the outside looking in. Cliche concepts, cliche sayings, simple things, basics always look so easy. Do them. Do them. It's not easy because you're fighting your nature. So when you're looking, discipline isn't about your tolerance or some will that never breaks. Discipline is about understanding that this is the way it should be done if I want the best results. So when we look at, for example, these consolidations, promise me that after you watch this video, you will never, remember, we're talking about a lower frame right now. It means that this information is being pumped out from 15 GMT to 20 GMT, so 5 hours. Promise me that when you want to sell, this is where you're at, somewhere here. And when you want to buy, this is where you're at, somewhere here. You're not in the middle. You're not hoping that in order for you to get a take profit position that you break out of the ceiling that's been created already, that you use the best possible price to your advantage. Promise me that when you see the market consolidate, now right now we're talking about a lower frame, and we'll go to another chart to see a higher frame. Promise me that when you enter the market, you will use the advantages that are being fed to you. I know the first question, but how do I know it's going to stop here? How do I know it's going to die here and then go back up? You never know, but probability says it's probably going to do that. And when you couple it with other confluences and the things we're talking about, you'll have a way better chance than you buying up here because you woke up in the morning, you're like, oh crap, it's going to leave without me. And then if you mismanage this, you lost for no reason. The little bit of control that you have is the price. Now let's look at it on an exaggerated way. This is the trades that I fed the community inside of my updates on USD JPY. Notice that every red check mark is pretty damn close. That is the difference between this sell and this sell, the highest sell, is 40 pips. Why do you think I did that? Because I know we're not bearish. So I know that as the market drops, these are all obstacles, every level, whether you use levels, Fibonacci's, order blocks, change of characters, moving averages. The moving average would kind of look like this, trend lines. I don't care what you're using. Everyone and their mother who knows what they're looking at knows that the market has a huge potential of stopping inside of this drop. So, or retracing, or turning this profitable 85 pip moment into just drawdown. So the goal is to be as far away from the next obstacle. That's the goal. When the market finally creates another high, comes back down, there's the next obstacle. But you could see that the market keeps repeating. That's why it's colored that way. I was probably teaching them something there or pointing it out to them so they stay smart on the chart, right? What I want you to do is to look at the market like this road, like this map, like this, if you ever played those RPG games from back in the day, you're just kind of going through the forest. You're just kind of going from forest to forest trying to find the gems and the jewels, right? To save the princess from the evil villain, whatever. So you're here. You're inside of 159,431 and you're trying to go to the next forest. But the next forest has an ogre in it. And you went to this forest here at 158,573 and you were so happy. Yay! I'm so good at this game. 85 pips. Woo! But you don't take profit. Maybe you didn't sell here. Maybe you sold here. And you're looking at this and instead of 85 pips, you got 45 pips. But you're unaware. Or maybe you are aware. Maybe you are aware. I'm going to go with you are. Because most people would understand this if they have any kind of knowledge. They know that this is a place where this market can easily go back to bullish or maybe just freeze up here. But because they need 80 pips to profit out instead of 45 pips, they need to get down here. And the market just doesn't have it. So you were so happy and now you're upset because the ogre stole your jewels and another player came into the game and knifed you in the back. And the princess is getting ever so farther away from you. And you're like, no, I'm going to lose. How did this happen? Why did this happen? And then later you stop the game and you're like, you let your little brother go, you know what, fuck it, you play this stupid game. I don't want to play this stupid game. And your brother just accidentally falls into the same trade that you wanted, but he was very successful and you weren't. What was the difference? I'm going to break it down for you. The difference is the person who entered here has way more space to target. Here, there's a ton of seller pressure. Here, there's a ton of buyer pressure. You know that because the chart is bullish. So when the market drops, basically what's happening there is it could just be a simple retracement, a lucrative retracement from a strong position, but just a retracement. So when the market gets to a critical position that's already been worked before, it does what it's supposed to. Starts to work bullishly until eventually it wipes the high. Now inside of this area, there must be a ton of seller pressure because eventually with news plus orders, we end up dropping for 175 pips. This is very normal because this isn't the seller position. It's this whole thing. Everything within it has a ton of seller pressure. The problem is that the buyer pressure is overwhelmingly strong. So the sells happen, especially coupled with news, but eventually die out in positions where the buyer pressure is just as strong. Again, think of it like a map or a forest or traffic. Seller, buyer, and it's just kind of bouncing between the two. So if I take that gold example where I say, promise me that when you see a high or a low that's built over time, this is an M15, so this is not a lot of time, that you will start to only accept entries from positions that make sense. This is what it looks like on a much higher scale, higher frame. Yes, this trade probably had some drawdown, but eventually that's what happened. This trade had basically no drawdown, very minimal drawdown, and that's what happened, 140 pips. The market goes really, really bullish, creates me a what we call a continuation position, and that goes for 130 pips. Market comes back. This was easy to understand, especially given the news that was going on during that time, 190 pips. You'll notice that it's either the lower high or the high itself. It's not going to be down here where I'm trying to sell. It's not going to happen. Let's look at another chart, GU. You look at GU, we're inside of these strong swings here. Look at this. Look at how similar these prices are. You think that's an accident? It's in the style. It's what's acceptable to the trader. Look at that. Now, I'm looking at a daily time frame right now. Some of these trades are intraday, but where the trends really begin are from the strongest, look at this, possible positions. There are other ones like this. NZD USD. Look at this. Look at this from the past. Look at this. Look at this. Right? We go back to other NZD USD trades. Look at this. Look at that. You see how those red check marks are all in the same position? Those are all things we've talked about in the community and trades that we've had. I am a swing trader and a position guy. I work the intraday as time goes on, but my goal is swing trading. You look at any GCAT, right? Go to the daily. Look at this. Look at the amount of entries in similar positions. That's what I want for you. That's called control. That's an edge. Because yes, you're right. I don't know if the market's going to stop here, but I do know that here I have more than that problem. If I sell down here, I don't know how far down it's going to go. And I also don't know if I'm going to satiate the desired pip point or percentage count or profit number that I want down here. So I have the problem of I need momentum. I've cut the legs out of my trade a little bit and easily retestable. So easy to lose. So that's what I want you to fix. I want you to fix the way you think about trading. I want you to fix the way that you approach this. I want you to fix how you come up with the trades. So again, final recap. You'll never get away with over-leveraged, intolerable risk. Never. 2, you can't get away with having a strategy that doesn't align with your lifestyle. And I'm not just talking about technicals. I'm talking about the management side of things. It's more important than anything, because what's the point of profiting if you can't manage out? What's the point of profiting if you're in profit 50 pips, 60 pips, but every single time that you're in profit 60 pips, you don't do anything with it, and then it just comes back, and then you lose, and then it's a back and forth. Don't make the market's job easier. Win when you can win. Promise me that you will use the prices. Comment that. If you're watching this right now, I want you to comment, I promise that I'm going to be as sharp as possible. I'm going to be sharp. I'm going to see a price, take a price. Let me know that you cared about this video, that this video did something to you, that this video changed the game for you in even a little bit. That when the market gets to your price, that it has to fulfill those 3 criteria that you've created. That when it gets to your price, you're going to enter with the lowest amount of risk. We call that participation risk. That in order to raise the risk as time goes on inside of those prices, that there's criteria for that as well. A reason for you to, everything must have a reason for you to do this action. It can't be feelings. It can't be vibe. It can't be hope. It can't be faith. And please, out of everything that we've said, find the self-control to understand that when the market is already in movement, the market can easily come back to where it was because consolidation is normal. This is gold. I chose gold for a reason. Gold is one of our favorite assets, right? This is us last week on gold. You see that? Similar. You see this? Similar. Let's go to a more exaggerated time. Look at last year around this time. Look at the amount of entries in similar positions. This is our style. And it's not just me. It's basically everyone that knows what they're doing. They're going to have criteria for entry, for maximizing risk, for even paying attention to a chart, for setting alerts. Everything has a reason. There's no busy work here. You don't vibe or feel your way through this. How could you build anything? You can't even build a business that way. Eventually, you got to know how to handle employees, handle inventory, handle expenses. Professionalism is going to be forced on you. Trust me, I know. Because there are businesses that I started that I didn't think they were going to do, like this one. I didn't think we were going to be here 11 years later because it was just me doing something like a hobby, teaching people. And then it became into this thing where, wow, people are actually interested in this stuff. They actually give a crap. And then, many years later, COVID happened. And everybody started wanting to be a trader, and now we're here. So the way it works is pretty simple. If you have no self-control, you have no defined plan, you're over-leveraged, you're not professional whatsoever, how could you possibly think that this is going to work? How could you think that this is going to be something that you can do long-term? What creates long-term success? A very repetitive system, something that is very normal to you. Because are you going to be at full throttle emotions every single day and think that you're going to be here 15 years later? That you're going to be able to see, for example, the students who make 100K, 160K, 50K, 67K. I'm thinking of 78,000, 40,000. I'm thinking of all these numbers that we put out there, right? I got a student that he didn't get paid by the funded company, but $500,000 they didn't pay him. Imagine that, but he made it. And you know what happened? He followed it up with more withdrawals from other companies. Not $500,000, but you don't make $500,000 and go, I don't know what I'm doing. That has a series of moments that build so much confidence that you'll never be the same person again. But how could you ever live that if everything you do is just erratic? How could you sustain this as a human being if every day is stressful and emotional? It's never going to work. And that's it. If you enjoyed this content and you want more, I invite you to join us on our next strategizing webinar. Let's have a conversation. I would prefer somebody who's new, right? I like dealing with new people because they don't have the damage made by other people, by other ways of being and years of losing. But if you are somebody who was in the community and want to come back, or you're somebody who does have knowledge, you might consider yourself a nomad style trader, you've been all over the place, you think you know all these things, that's cool too. But newbies are usually afraid of joining the community because they feel they're going to be overwhelmed. Yeah, you are going to be overwhelmed, but you want to learn, right? You think that something like what the Fry Daddy's doing is like a part-time to make 8K, right? Off pressing buttons on a phone. You think that's going to be easy? You think that's going to come off of you buying a course, understanding 3 key points and going, yeah, now I'm a millionaire now? You're smarter than that. You know better than that. This is going to require work. So don't even do this if you don't think you're going to be able to survive the work. But again, I'd rather be a 20-minute, 30-minute a day person consistently than somebody who's trying to figure this all out in 30 days. One of those people I've already proven to you, and through all these testimonials, that is a common theme. Every single person, they had to learn it, and that's not happening overnight. And that's it. I appreciate you guys. Thank you for watching this video. If you enjoyed it, like, comment, subscribe. Go share it out there. Tag me. Let's connect. Let's see what's going on with your trading. I appreciate you for watching this. As always, happy trading.